G'day guys, John from Rural Co-Water here with your weekly Southern Basin market update for April the 2nd. Although we're starting to experience some cooler temperatures and the cooler mornings certainly are lovely, we're still seeing it being pretty dry across most of the Southern Basin. Patches did get a little bit of rain last week, but not much. And the forecast for the next through April is for it to continue to remain dry. So this will keep some pressure on allocation prices. The other thing it's keeping pressure on is storages, and we're seeing the Southern Basin storages continue to drop into this year. At the moment, all the Southern Basin storages total is at 54%. This time last year, they were at 79%. In particular, Hume for the Murray irrigators is at 26% compared to 66% last year. Now we know they'll top that up out of Dartmouth, but that has been drawn down quite a lot in the last 12 months. And while in the Bidgee, Burrinjuck is at 45 now compared to 79%, and Blowering is at 31 compared to 66% last time. So they're about 35% down in the last year. Although there is some inflows in the basin as a total, maybe not in the Southern Basin, we are watching all this water move from Queensland into the Northern Basin. And we expect some of that will get to Menindee and top Menindee up, and that'll keep Menindee in MDBA management and help with allocations in the Murray next year, as they can use some of that water to manage South Australian demand. Last week we did see substantial water move from the Murrumbidgee into the Murray, and this caused the IVT to open up and allow space for back trade from the Murray to the Murrumbidgee. At the moment, that IVT remains open in both directions, allowing the Murrumbidgee to be totally connected to the Murray market. Unfortunately though, for those guys in the Murrumbidgee, yesterday's allocation announcement saw the general security licence holders not get any more water, and that allocation remains at 39%. So currently, with that market being connected between the Murrumbidgee and the Murray, we're seeing the prices in New South Wales, Bidgee and Zone 11 to be about 180 to 185. And a lot of that water is being taken into Vic and SA at the moment. And we're seeing the market there in Zone 7 and SA at 190 to 193, slightly softening. Above choke markets, this is where we did see a little bit of rain in the last week. And we've seen that's caused a decrease in demand. And that's eased some of that small hand-to-mouth purchasing that had been happening. And it's just eased that market a bit. In New South Wales, in Zone 10 and in MIL, we're seeing the price to be about $107 to $110 a meg. And in Zone 6, it's about $110 to $115 a meg. One thing to just be thinking about at the moment is trade from New South Wales to Victoria, that interstate trade. That'll close on the 30th of April. So if you have water in New South Wales you need to bring across, if you're looking at buying significant parcels of water before then, it'd be best to do that sooner rather than later. Well, at the end of the season, fast approaching, we're seeing growing demand for water products into next year as growers look to secure some supply, especially as they're looking at those dams emptying. We're seeing a large volume of inquiries for forwards and for carryover space at the moment. And although many buyers out there, especially in that forward market, would love to buy multi-year forwards, with that uncertainty we're seeing with the lowering dam levels, there's not a lot of buyers out there, and the ones that are out there are asking a really high premium for that second and third year. In terms of forwards into next year, Zone 7 and SA, we're seeing that priced at around that 265 to 270. In Goulburn, they're around $160 a meg, and in the Bidgee, it's around $270 a meg, and Zone 10, above the choke, we've been doing them at about $180 a meg. Some changes in that carryover market are quite apparent. So whereas with the wet few years we've just had, demand has been in that low reliability space. This year demand, because those dams are drawing down and the risk of spill is at 50% in the Murray and 30% in the Goulburn, we're seeing most of the focus in that market be on high reliability space rather than low reliability. And then the Murray, the price, and the Goulburn, the price is around $10 to $12 a meg at the moment for high space, whereas low space is about 100 to 105 in the Murray, 65 in the Goulburn, and Murrumbidgee general security is around 100, and Zone 10 general is about 70. So that's our carryover market. And the permanent markets, I just dropped my bit of notes there. Permanent markets have been very active. Most of the parcels at the moment are being sold as dry, as those selling them have used their allocation this year. And that's just resulted in a bit of a discount on pricing that we saw from a couple of months ago as parcels were still being sold wet. But there has been a bit of resistance from buyers just at the moment with the calling of the election. as buyers are just cooling their heels a bit to see what the outcome of that may be. And with the election being called, the government and all the departments have entered into what's called caretaker mode. And the Water Recovery Office has advised us that because of this caretaker mode, they won't be issuing any new contracts on restoring our rivers or making any decisions around EOI or those open tenders. AWEP, there won't be any contracts issued during this period, but that department will still be working on that program. As always, if you're looking to buy or sell, temporary allocation, permanent entitlement, carryover, or forwards, contact your local rural co water broker for the best advice and the best price. Thanks.